It seems that we're recording now, so let's on 10:03 my time, 8:03 Pacific. So if nobody else jumps in 1 more minute, I will start. So we have Madame Dumas, Officer CPT, Bilagua, of course, Cube. Who else? Okami, that is more than clear. Avinash.
Hello?
Who is Avinash? How are you? What's your nickname in Discord, Avinash? Blooming trade. So fit is fix. So now I can see some of your faces. Okay, guys, let's start. Good evening again, and welcome to this workshop the idea is I wanted to work with you from the basics of risk management and how to manage your trades once you're jumping on them and manage your risk in terms of your stop losses, profits, targets. So what I would like to start is from the very basics, and I'm going to start sharing some. Of course, I didn't do any formal presentation, but I think that we can work on some of this information that I have here, which is very interesting. Let me see. Sure. So I assume that you can see the Excel right at this moment. Let's see. I want this here. I wanted the chat. I want it here. Just trying to put everything in order so we can start working. No, the chat, I want it here. All right. Participants. Okay. So are we good? You can see the Excel here. I have so let's start, as I said, from the beginning. To begin with, we have the idea again, guys, is I have seen a lot of we have had very good weeks, not very good days on the past 3, but a couple of good weeks in general. But I still see some people that are not able to manage their own risks, and at the end of the day, you end up red, right? So, and most of this, I have found this because you're not consistent in the way that you're managing your portfolio. So let's go to basics. To begin with, you have first to have what is going to be your goal, and that goal is going to be based and has to be very realistic. in terms of, okay, what is my account size right now? And account size or port doesn't mean all the money that I have available to trade or whatever. I mean, it's you have to determine with with which amount are you going to start your port, right? And this is good because it's going to be easier for you to follow up on your progress and not risk more than needed to begin with, because you have to start risking more of your money once you start to become consistent. So otherwise there's no point of just replacing the account with more money and funding more and more, and if you continue doing the same mistake. So what I want you to do is that everybody grab a piece of paper and pen or whatever you want to, your notepads or whatever, and you have to first realize, okay, starting this tomorrow morning, how much am I going, my port is, right? But what am I going to be willing to risk the following week? And I'm not touching that amount, because that's the way that I'm going to measure how my performance is the following week. And that's what I told you, that it's very important that whatever you're going to learn today, at least give me the opportunity to prove you that your trading is going to change dramatically, but you have to follow this 100%, at least for 5 trading days, and so you can see the difference. And now, starting with your goal, I want you to write down what is the amount that is, and you don't need to share it, or you want to share it, it's even better for me as well, because at least I can give an example with an average of what everybody's having. But let's start with this simple question: how much my port is gonna be for tomorrow? How much I'm gonna be able to have in cash available for tomorrow? So write that down. Whoever wants to share it, that will help me, so I can do some examples with amounts that are real from your ports. And the second question that you have to do about your goals: what do you want this money? What do you want to do with this money? You want to grow the account to a certain level, probably to 25K or a little bit more, so I don't have the PDT rule problem. You want to use a small amount of capital to generate frequent returns. You want to compound it over time. You want to increase the amount every month, every paycheck. You want this account to be an income generator or an investment. And the most important one, are you serious? Are you really serious about reaching this goal, or you're just playing around trying to get rich? So all these questions that I put you here, it's good for you to have them and think about it, and exactly what is your goal, right? In the case of, to make it simple, let's say that everybody here, and Cody already shared with me here that he has $2,000, and I think that is a great amount to begin this journey of how are we gonna manage it. And let's assume that Cody or whoever is in the same situation has 2K for tomorrow. To begin with, guys, if you're gonna be trading intraday with us, you cannot do it with a margin account to begin with. So the first thing that you have to to be prepared is to have the tools needed in order to be successful. And those tools are very simple: a decent broker account, a decent platform where you can trade. You have to have very clear where you're gonna be your stop levels. So we can, and we're gonna work on that a little bit later. So you can develop your brackets or your templates for your entries and exits. And of course, you have to work to have an edge. So for those who have a margin account and do not have more than 25K, you're not doing any good to your monies taking trades that are meant to be intraday. Most of the trades that we take every day are intraday trades. Very few I meant them to be swings, and I am very specific about them, and usually have more time ahead and for expiration. So we do have some room, but most of the 95% of the trades are meant to be sold the same day that we are trading it. I'm not talking here about the captain lots. Those are swings, and those is a different story, and you need a margin account for that type of trades, which they are working beautifully, and I think that they're going to be even working much better in the future. And that is good also to have a side account for only those trades, because at the end of the day, what we're building with those type of strategies is a portfolio. We have a portfolio of several contracts there that are working for us right now. On the other hand, we are day trading here. So first step, guys, do not take any trades intraday unless you have your three trades available, and you are very conscious that you're only going to be able to take one trade every day, and then you have to wait 2 more days to get another intraday trade available. So if you already are topped with your PD rule and everything, don't take that trade, because mostly it's very likely that that trade you're going to lose it, because the setups that I look for and the ranges that I look for are meant to be for the intraday, for the next hour, for the next for the day. So if we leave them swinging because we have the intraday pattern issue, that setup it was not meant for that. And that is the problem, that sometimes we get in these situations. When you get into the trade, you don't sell it because you don't have, there are some strategies to take some risk off and you can make a vertical out of it, but we're not going to work with that right anymore. So to begin, guys, if you don't have that 25Ks, or you take one trade per day, or you don't take it at all, because otherwise you're going to be just throwing your money to the trash can. Okay, so we are very clear about that, right? You have to make sure that you have a cash account if you have less than 25K. Second, guys, you have to have, again, a good platform that you are very familiar with. Don't start trading with a new broker or new platform and that you just opened yesterday and the next day without knowing how it works. Go and execute trades. You have to be already familiar with it. You at least to know the basics of how to get in, get out, and don't get in situations. A lot of mistakes are made because of that. So those are the very basic and very dumb comments sometimes, but it's real. A lot of people lose a lot of money because they don't even know how to trade, or because sometimes you have to get out, or you have to get into a trade very quick and you're not able, and then you're chasing. etc, etc, you know. Hey, Alfonso, you're not allowed to set a stop loss and sell an option on Webull, are you? Yes. You're not allowed to set a stop loss and sell an option on Webull. Why not? You can put a bracket, a limit order. When you say sell with a limit, with a profit or a stop loss, a bracket. Yeah, it does have brackets, OCOs. No, it does have. Yes, I'm pretty sure that they have it. And we can give it a shot a little bit later to see if we can figure it out. But yes, it can be done. Most of the, I mean, very simple. And if for some reason Webull or any other broker don't have that, get out. Because you're just playing in disadvantage in that regards. But I'm pretty sure that Webull has it, and it's just a matter of find out where that is. We can work it out. Okay, so let's continue. And if you're okay, we're gonna work with the example of $2,000, as I said. So what is gonna happen if you have $2,000, guys? We're gonna go to this beautiful table that everybody knows, but nobody uses, right? So in the example of 2000, what it's happening is, since you have $2,000, your maximum position per trade is going to be $350. And you can take the proportion in case that you have, but here this table has already some levels determined here for 500, 1,000, 2, 3, 5, 7, and $10,000. So what I mean with this is you cannot take any position more than 350. And as you have heard, we always sometimes start with a starter or initial to see how it works. Put it very, very simple, guys. Your starter should be half of that maximum amount, or one contract, whoever is less, right? One contract or half of your position or your maximum position. In this case, it's going to be one contract or 350 divided by 2, I mean 175. That is going to be your starter. Sell to close in Webull and choose order type stop. Yeah, that's it. You got it. And ask. I mean, there's a lot of people who use Webull and they already know how to work it out. I mean, reach out with your other members and they will help you out. Everybody's very, very helpful here in our community. So, okay, coming back, guys. So this is very important. 350, if you have a 2,000, 350 per trade. Always. And each trade that I call has to follow that rule. If for some reason I call a trade that is $4 per contract, is not for your account size. Sorry, it's already 10:30 p.m. here. Account size, guys. So very simple. You don't have to take all the trades, and you don't have to push more of your limits. So there are some trades that are not going to be willing. So that is here what is very important. If you see here, for example, a $2,000 account, maximum positions is 350, and we're going to risk $65 to make 200. The $65 is going to be your stop, and 200 is just 3 to 1, right? 65 times 3, more or less $200. And on the price range options is what it tells you what I'm going to be able to buy only from 0 to $3.5 options. 3.5 is going to be only one, right? What I suggest is at least to get into trades where you're with your maximum position, at least you can buy 2 contracts. So you can, otherwise you're going to have to get out on this, on the first resistance. You cannot, or you have to move your stops very quickly and you're going to have to get out quickly because you only have 1 contract. So please, what you have to do again, you already know how much you're going to willing to spend tomorrow or to invest. Determine what is going to be your maximum position per trade. In this case, when you determine that, what is going to be your risk and what is going to be your reward. Okay, so are we good on that part? Everybody has, and you're not going to take more than that amount. And to make it simple, always start with half or 1 contract, and then you add. When you're going to add, when we break the first resistance. And I'm gonna teach, we're gonna go to the technicals a little bit later. Right now it's just the basic theory of risk management. Okay. I don't want to know if I call a put or something is gonna happen. Don't go all in. It's same. If I call a put for a hedge, what are you gonna do? You're gonna hedge with it's same. It's gonna be which one he called. He called the 435 puts. There are 130. Okay, I can only buy 2 or 3. That's it. And you're gonna take the same procedure. You're gonna risk $65 to make 200. That's it. Okay. Then we're gonna see how we can make more with the famous rolling or moving stops, or but to begin with. Another very important thing, guys. Now that you determine how much you're willing to invest and everything, you have to set a daily profit goal. And that is up to you. Let's say $2,000. My daily profit goal is going to be $200. Because I mean, it's very unlikely that the first trade that I get, I'm going to get the 1 to 3. I'm going to look for 1 to 3 risk reward, but not always you're going to get it, right? You're going to get as much as you can, and then you're going to have to get out when the trade is not working anymore. So you have to determine how much is going to be your daily goal. My advice is that your daily goal cannot be more than 1.5, no more than 2 times the maximum reward for 2 trades. In this case, $2,000, 200, 300 max. 400 is very, I mean, it's very interesting and nice, but it's very not unlikely, but it's very aggressive, because right now what you want is to build confidence and to build your port. So you have to start looking for base hits, and the only way to get good synergy and good confidence is achieving your goals and stop trading. Over trading is one of the best reasons why. If Alfonso continues giving trades all day like crazy, that's a different story. If you already reach out your goal with the first 30 minutes of your first trade, you can continue in the room, you can follow the trades, play with them in the charts, learn, but you already accomplished your, why you have to risk more if you already did your homework, right? Leila, 1.52 times your daily goal should be, for example, if you have $2,000, your maximum position is going to be 350. And that 350, you're going to risk 65 only to make 200, right? So $200 is one time your maximum of one trade. So your profit should be between 200, no more than 400, right? Your goal. The equivalent of 2 trades, full reward for 2 trades. I mean, realistically, 1.5. So if I have a $2,000 account, I will get out or stop trading for the day if I reach $300. As simple as that. Okay. Which is 1.5 times my reward for one trade, right? In this case, if you put it relative to portfolio, it's like between 10 and 15%, Leila. I would say if you achieve between 10, 15, yeah, 20. I mean, if you have 1,000, 2,000, 3,000, 4,000, yeah, 20 is not easy, but you can, but once you get to 10,000, 20,000, I mean, you cannot be looking for 20% every day, right? As a goal. That doesn't mean that you can make more, yes, but that is going to be your goal. Sometimes you can reach your goal and you still have some trades there that are already risk off, that you already roll them, or you already have your stop sets, and you can continue following up on those trades. You don't have, achieving your goal doesn't mean, oh, I have to sell everything and get out. No, you just have to make sure that you don't end that day below that goal that you already achieved, right? So that is very important. Okay, any questions from here? And it's at the same time, a second, you also have to have a goal of maximum loss. If I lose, how much I'm going to stop trading that day? And you can put it the same, right? You can put it even. I mean, if I make, it's very aggressive, but that's the maximum, right? Either I make $300 or lose 300 a day, I'm done for the day. The higher the port, the lowest return you're gonna see. Yeah, no, yes, of course. You have to adjust. Okay, so can I continue? Everybody has another question? It was clear what I said. So determine your amount, determine what is gonna be your maximum trade, amount per trade. Have very clear what is gonna be your risk for that amount. How much is gonna be your reward for that trade. What is gonna be your daily profit or loss goal to stop trading that day and be day done, either because you were profitable or because you just already top your losses. Okay, so let's continue. Now, how are we gonna grow the account, guys? Because that is the important thing. And this is when this becomes interesting. How are we gonna get into the trades? We already know. We have to focus also in very specific strategies. As you know, most of my plays are previous day high, lows, breakouts, right? So you have to focus on only one strategy at a time. So my advice is just follow the trades that I'm calling. Another issue that I see a lot with a lot of you is that you take my trades and you take, I don't know how many other more from here, from there. I'm not saying that only my trades works. The thing is that you have to be consistent first. You have to have only the number of trades at the same time that you can manage. And taking trades from everybody. If Chica now is playing this one and that one is exploding, and I mean, there are 10,000 tickers in the stock market every day. Of course, there's a lot of trades are gonna be even doing better than us. It's impossible to be in all of them. So let's just focus in the ones that I choose, because the ones that I choose have the same strategy, breakouts from previous day high or lows, or intraday or inside candle from the daily pattern. There are many other, there are people who like to take the bottoms to look for blah, blah. We cannot be in all type of trades because you have to be good at something first. And most of the breakouts that we played, they behave alike, right? So that is what is very important. So let's say we have $2,000 account here. And the way that we're gonna do it is the following. So if we have $2,000 accounts, we know that our investment is gonna be 350. When are we gonna get out of the trades? Okay, you're already acquainted with that. Usually it's at 25, 50, 75, 100%. You're gonna follow that when we have a choppy day. How do we determine that we have a choppy day? And inside it, if the spies are trading within the Keller channel that you have in your template, we have an inside day. That means that the range is gonna be tight. And when we have a tight intraday range, we have to get out quicker with less percentage profit, because most of the trades do not have continuation. Since it's not a trend day, you cannot just continue expecting to that price still going higher or lower, depending what you're taking. So if it's chop day, you have to take your trades 25, 50, 75, 100%. That is rule number one. Once you take your first 25%, you have to move your stops to entry price or a little bit below. You can move it 10% below. If you get stopped, you get stopped, period. Don't move your stops. Let it be like that. Or if you want to be a little bit more aggressive, you can move your stops until you get to 50% on the second target. That is up to you. The only thing is that if you do it once, you have to do it all the time. Whatever you choose, you have to choose the same strategy all the time. If sometimes you get out at 25%, you move your stops at 25, and sometimes you move it at 50, then you're gonna have to put more variable in your formula, and it's gonna be very complicated that after certain amount of trades, you're gonna be consistent in profit. Because at the end of the day, what we're looking is that the ones that we lose less than the ones that we win. And if we are making variables each time with our stops, with our targets and all that, you're gonna complicate the formula, right? So are we clear on that? 25%, you move your stops to entry, or 50, or okay, Alfonso, not 25 or 50 in between, okay, at 35, whatever it is, That's fine. My only requirement is that whatever you choose, you have to do it with each trade. You cannot be changing every time. All right. Got it? Got it, Ando? I see that you're here, and though, welcome. Okay. So now that we already know all this information and we know how to, when do we have to get out or move your stops, the next step is how am I gonna grow my account? If you really wanna grow that account of 2,000 to 25, the only way to do it is to compound your profits. And what I mean to compound your profits is if I have $2,000 and I take one trade, for example, my position is going to be 3,300 to risk 50, right? Risk 50 to make 150, 3 to 1. Once I get that, my next trade, I'm going to compound it and I'm going to change my size accordingly to my new balance. So now my balance is going to be 2,150. So I have to adjust that. My advice is that you do that every time that you move to the next level here in the table. If you have 2,000, you're going to continue following this risk reward until you get to 3,000. Once you get to 3,000, you're going to move your risk reward to 75 to 50. You get to 5,000 to 100, 350. Not before, not after. This Excel is available in Circle. Yes, yeah. What I'm gonna give you here, guys, is, and you have this one, where you can have this. I did this for you as well. That, for example, you have $2,000 account. You're gonna risk 350 to make 200. Okay, so it's 350. So here, like 0.5. Okay, 350. What I have here, this. Okay, here. So your size is gonna be 350. What it tells you here is, okay, if I have $350 of size, if the contracts are 25 cents, and let's say it's not 25, Alfonso, it's 24. Okay, so it's 24 cents. So here is gonna tell me that the maximum contracts that I can buy with 350 are 14 contracts. I'm gonna scale them 4, so my starter is 4 contracts, and I'm gonna be scaling 25% 4, 25% more 8, 75% of the position 12, and so on, right? Or you can go half, as I told you, start with 7 and then you add the other half. But at the end of the day, this table, what it tells me is maximum contracts are 14 in lots of 4. My stop for the starter for these 4 is going to be 12 cents. And my stop scale size price. And this is my profit target. So when I have 14 contracts, these 24 cents plus 51 cents. When they get to 51 cents, I'm gonna get my $350. So here's already giving you the price that you have to set as your limit for profit, and the price that and the one for your stop 15 cents is your stop, 51 cents is your what is it here? Yeah, it's correct. This is your stop, minus 18, minus 27, and this is your target, right? So this helped you a little bit. It's just a matter of just to see, but it give you an idea. With 350, I know that I can go up to here, right? A $350 contract, since I only can buy one, but it's nothing, it's not rocket science. But yes, everything here is gonna be available. Okay, so are we good with that? So we understand we already have to determine our maximum amount, what is gonna be, how much we're gonna risk. So forget about risks, stops in percentage, guys. This, you can translate that in percentage once you know your amount that to risk, but it is very simple. You have $2,000 account, you're gonna risk 350. You're gonna place 350 maximum position to risk 65 to make 3 times that, 200. As simple as that. Understood that part? If you have $2,000, there's no way that you can take a trade of $500 or $1,000 trade, because you're not gonna last. Unless if I would have the $2,000 and I want to reach the 1,000, I have to put my stop at $65, and it's not gonna last much, but you can do it because you're gonna get your 200 quicker, but you have to get out once you lose $65 with your 2,000. That's the only way. When I scalp, for example, and I go 3-4 times, I have the same thing. I mean, I'm going heavy with my amount, but my stops are the same. My stops don't increase in proportion of my play, because I already have my risk per trade. So you can go heavier on the amount, but you have to stop on the same dollar amount. That was clear? That is very important. You can go with the $2,000, but you only can lose 65. And you know that is going to be very tight, right? It's very easy to go minus 65 with $2,000. So that is the reason that you go with 350. That was with $2,000 account. Can we play a 1K contract with a stop loss of 20%? No, because your maximum risk is $65. That's what I explained then. If you wanna go with $1,000, if you wanna risk $200, you have to have at least $10,000 account. This example, because you're saying 1,000, 20% loss stop, so that is $200. Oh no, even 400. So you have to have $30,000. So you just imagine that, and that is the problem, that sometimes you risk too much for a single trade for the size of the account that you have. And the idea of this proportion is that you can last as many trades as possible. So by probabilities, after 10, 20, 30 trades, even though you are 40%, 30% wrong, you're going to be making money. And that is the beauty of this 1 to 3 reward, guys, that we only need 35% of the trades to be correct in our side to be at least break even or green. And as you can see, every week we are around 70 and 80%. So we are like more than better. If you have a 50-50 with this methodology, you make a tons of money. But you have to make sure that every time that you lose a trade, you don't lose more than $65 if you have 2,000. That's the clue. Okay. And how are we gonna grow it? Compounding. So another advice, don't take more than 2 trades at the same time. I don't want to see in any of your portfolios more than 2 trades this coming week, even though you have $10,000, guys. And preferably go one by one until you close your trade and you already know if you lost it or you won it, you go to the next one. And if you went probably in the first trade, you won already $500. I don't know, with 2,000, probably I can scale up my next trade, right? I can do it in proportion bigger. If it's a longer swing, are the same rules. Exactly the same, unless, and that is different when you have a vertical spread like the ones that we're playing in Captain Lot, right? So what is the idea of the Captain Lot, guys? The Captain Lot is, are you gonna ask me now? Okay, for the Captain Lots, what is your proportion that you have to, every lot has to be the equivalent of your maximum risk times 2. For example, if you have $2,000 and you're playing the Captain Lots, you cannot risk more than $150 per trade, right? But since we are playing swings, that trade is not gonna be 0 because we're not gonna wait until expiration to get out. So that's different. That's what I'm telling you. Just continue doing Captain one lot means one lot is one fixed amount, is not one contract. So you have to determine that. If you want to do your Captain one lot, the equivalent of one maximum position, $350. Okay, all your Captain lots you have to buy the amount of contracts equivalent to $350. But if you're swinging, it's the same rule. That doesn't mean that because I'm swinging, I'm gonna change my stops. No, because at the end of the day, no matter if the trade lasts 5 minutes or 2 months, you have to continue managing your money the same way. The thing is that if you have a swing trade, it's very likely that it's not gonna move as aggressive as the day trades that we do, right? Because you're gonna take longer expiration, and so you're not gonna be on a swing trade 40% in the next 5 minutes, right? Or in the next day. So the swing trades, they take care of themselves by taking longer expirations. So they don't have the volatility that a intraday 1 week, weekly, or next week contract has. Okay, any questions so far? Guys, if you follow this is 80% of your success. Only this. The most difficult part is to be disciplined with this. You're gonna start the day tomorrow very obedient, and after 3 hours, okay, let me take this a little bit more here, a little bit more there. I already heard something else here. And then when the shit hit the fan, right? I'm not telling you that you're gonna be able to do it, but you need a bigger port for that. You need at least 30, 40, $50,000 to be playing 10, 15 trades at the same time. If you have $2,000 to $10,000, that is a small account, you have to go one by one. Otherwise, you're not gonna move from that amount in a long time. Okay, so are we good? So now that we have the basics of the risk reward and we know where our amount, let's move, and I'm gonna change to the technicals. How are we gonna manage that with the graph, right? Which was another question that many people had. And let's go to the template. Where is it? Okay, I'm gonna stop sharing so I can change the. Where is it? Portion of a screen. No. Show Windows. Sorry, but I'm got lost here. Where is it? Ah, here it is. Okay, can you see my template right now? We okay? Yes, you can see. Okay, let's put an example, guys. Tesla week. Everybody is very acquainted with this template, and most of you are already using it and everything. So how do we play Tesla, right? We already knew from Tesla, for example, that it broke the last day range. It gap up on the daily, but blah, blah, blah. All that information doesn't matter because at the end of the day, I'm going to give you the place, right? But let's think that we get here after this break on 827.03, we get here to Tesla. How do you gonna manage your trade? On the 10 minutes, guys, you can use the 3-minute graph, which is here as well. Then I put it here for you. You can get in on a cross, 4-8 cross. Let me put it here. Let's say that we took it on a break here, 8:30. I called Tesla at 8:30. Let's go with calls, guys. So you have your 3-minute chart here. When am I gonna get, because Alfonso already called it, okay. I'm gonna wait for a 4-8 cross like this one. Four 8 cross means that the yellow line cross the red one, which is the 8, price confirm. So now you wait for confirmation. It's a 3-minute candle, so you can wait 3 minutes and don't get crazy. Okay, this one close above. I have a cross, the price cross above the 2 EMAs. I get in here, 8:30. And I continue managing. Okay, once I got in, I forget about the 3 minutes. And then I move to my 10 minutes. So I'm already here. Okay. So how am I gonna manage? Okay, I know that my first target is 8:30. So we get in here, we go to 8:30. You either take profits here or move your stops or whatever you do. What are you gonna do? So I'm gonna wait to see what it has next because my next level is 8:38. So, but the most important part, guys, is you have to watch your 4 EMAs. It's holding 4 EMAs. It's holding 4 EMAs. It's holding 4 EMAs. Here didn't hold it, close below, but still the 8. Here, oh, it's complicated, but hasn't crossed. We have a cross on the 4-8, confirm on the 10-minute. Uh-oh, we already crossed, confirm below. So you either get out there, because if you wait for the 13 and if Tesla is even more complicated, but once it cross here, you can see the cross, confirmation cross. What do I mean with confirmation? That it cross and price confirm, close already with a cross confirm. I get out here. What time is it? 8:30. I go back to my 3-minute, 8:30, 11:30 to be exact here. Yes, 11:30. I go back to my 3 minutes. When do I get out? On the 3-minute cross, confirm, that's my trigger. So the 3 minutes, you're gonna use it only to know exactly when to sell and buy the contract. And what it's gonna give you, if you're gonna get out or in of a position, is the 10-minute. So the 3 minutes is only gonna help you to exactly tell you when you have to push the trigger. The 10 minutes is telling you this trade already gave up, right? But the exact time, the best time, once I determine that I have to get out, now I have to see which one is the best position to get out, right? So that's when you use the 3 minutes. So the 3 minutes, you only use it when you're gonna pull the trigger, and the 10 minutes to follow up. See? So in this case, we were here, we have a confirmation here. We got out around here. I was trying to look for the 11:30, but let me put it bigger here, maximize. This is the 3 minute, 11:30. Where is my trigger? 11:30, 11:30. Here's the cross. Here's the confirmation. Here. At 11:33, I get out. Bye-bye. What happened next? Not much, because Tesla was very strong, but it went down, right? We got out here and it went down all the way here. Oh, it crossed up again. All right, when's my trigger? We were okay, cross on the 3. And it held the 4, 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 held the 4. What? Why did I held? I mean, you don't get out. So here is when you see, okay, I'm 30% already. Alfonso told me to sell one contract, but it's still holding the 4 EMA. I just moved my stops to around here, right? Still more okay around here. So you start managing your trade accordingly to your technicals. Because it's good, you have to take a 25%, but if it continues to have strength, I mean, don't sell at 25, just move the stops and continue. But the only way that you can manage that, yeah, the happy owner of third lecture. But you know how much is Tesla now? I have 200 shares of Tesla of 845s, and hopefully tomorrow are at 850. So At least I can pay the commission for that. Hopefully. But I'm selling that shit tomorrow morning first time. But coming back to the topic here, guys. Here the graph is telling me that's what I didn't sell in Cuba. I'm just still waiting when Alfonso is gonna sell. What the hell? I mean, look the volume creeping. Another important thing, guys. When are you gonna get in? I'm gonna get in on a trade when it breaks the level that I'm looking for, like here, when it has a cross, and that cross also you have to look at the volume. So I have a cross here, I have a broken resistance, and I have a big green candle, right? So that is a go. Hey, it's breaking here. It's about to cross. What is happening with the volume? Oh, yes, the volume is decreasing. I have to get out. This is a confirmation. This is my third confirmation that I already have a cross. The price is getting down and the volume is drying. So yes, go to my 3 minute and I'm gonna get out. So follow the trade in these three different things. Price action in terms of your support and resistance, the volume that is supporting that price, and your EMAs to let you know if you're gonna continue or not, and when exactly you're gonna get out and in. 10 minute, 3 minute, and volume. It's all that you have to take care of. Alfonso, should I add here? I don't know if there's volume. No, it's decreasing. Now we have a green candle. Yes, add. It's breaking your support, your resistance, sorry. It's getting volume again. Yes, you can add here. It's holding the 4 EMA. You have to be asking all that question all the time. And the only way to be paying attention on all these things within this template is only to have one trade. How can you do it with 3 trades at the same time, right? At the beginning. Later on, you're gonna be able to do it. But all the graphs that I have on my watch list, if I have 8, 10 graphs, I already know very low my patterns and my EMAs and everything, and I quickly see when something is breaking. I go and then I concentrate at least 1 to 3 minutes on that chart to see if I have to get out. But if you're starting, if you start learning, and you first have to focus in one trade because you have to master how the price action moves. Why we have the 4? Because 4 gives us momentum. The 8 gives us a reference if we have to get out or not. The 13 tells you which is the trend. And the 50 is our last defense, right? It's the strongest support or resistance level of the day. So that is the reason that we have those 4 EMAs. And the reason is that we have to follow candle by candle. And that's why we have 10 minutes. Imagine if we have 1 minute, 2 minute, 3 minute candles, you get crazy. I mean, it's 10 minutes is a very nice time frame that gives you some calmness, that you can follow your trade, that you can really see what is happening, and give you good signals to get in and out in appropriate times. So any questions again, guys? So that is the reason that we have. And again, remember that I told you when you have to get out or in quicker of a trade. In this case, the color challenge that you have here, what happened when it gets out? It's a trend. So we have trend. See, it's getting out of the first 2 hours, is trending. It got in the spice. Look what happened with Tesla. All the time that it was inside the channel. From here, 9:15, to here. It broke at the very last part, but so that is telling me what is we have a very tight range. We have to get out quicker. If I'm already 25%, 30%, I'm out because it's not gonna have continuation. The market is not having continuation. Questions? So you have right now the foundation, guys, to make money. Risk management, you already know what is your maximum amount per trade. You already know how much you're willing to risk and how much is your stop, your profit target. And you already know how to manage your trade once you get in with your technicals here with your 10-minute chart. I want you to concentrate tomorrow, this week, only in these things that we saw today. I want you to start with that amount that you already determined, and I need you to journal every day of the following 5. And what I mean journal is not just write how much you made or you lost that day, is go to the trades of each trade that you did that day and do this and okay, I got in here, what happened? Oh, I got out here, why? What happened? I mean, why did I go out if it never broke? Do some research and write down your notes. Oh, I messed up here. I got in but never crossed the EMAs. Oh, okay, that's why. So I paper handed. Oh, yes, okay. Oh, I got in here and didn't move the price. What happened? Oh, the volume, it was very weak. It was not the appropriate level to add the position. It was right here. Okay. So focus on volume. Notes for tomorrow. You look the 10-minute 4-8 gross is to determine that it's time to get into a trade or get out. And the 10-minute is to tell us the exact time at what time you're gonna buy that contract or sell it. The 10-minute, you only gonna use it for the very, very short term to tell you when to click send. Is the micro moment of truth, right? But the 10 minutes is gonna tell you, okay, you have an opportunity to get into this trade or this trade that you're already in. It's time to go out. Is that clear, Kevin? Anything else? Something else? Who has TOS here? Okay. Regardless of what you have, my recommendation, guys, see, if you right now not very savvy yet with your brackets and everything, at least starting tomorrow, all the trades that you start, or either you started and you immediately trigger a stop on your maximum risk amount, or you make a very simple bracket that with only stop, you buy it with a stop limit order or a stop. I rather suggest you to get a stop limit order because you can determine the exact amount of what, if you put the stop, it's gonna take you market and sometimes it's gonna give you a fill even below your maximum amount of risk. So a stop limit is the best. So you exactly tell them, I got $1 contract and I have to, and I only can raise $20 of that $1. I mean, $1, which is $100, and I only can raise 20. Okay, so my stop loss, my stop limit is gonna be 80 cents. And since you're only gonna be taking 1 or 2 trade max, you can manage manually very easily your profit limit orders, right? But follow your table. And the table is very, very simple, guys. It's like, if you follow, just take the proportion. It's around $2,000. It's like 15% of your port is your maximum amount per trade, and your risk amount is between 2.5 and 3% of your portfolio. And your profit target is 3 times your risk, right? So if I'm risking 100, it's to make 300. Any other questions? Yes. You should avoid all spreads that are very wide. And I'm going to try to avoid them as well. Yes, because the reason is that you already start with disadvantage, right? And if you don't take, if you have a $2,000 account, you have to avoid wide spreads, and you have to avoid underlines that are bigger than $150. So you cannot trade Roku, or you cannot, I mean, you have to go to the, unfortunately, less stocks right now are less than to 150, no, because the market has been growing, but try to, the stocks that give you more age are the ones that can give you the opportunity to buy more contracts because of your size, right? That doesn't mean that I'm going to take one that is not very liquid and has wide spreads. I mean, you can take Wells Fargo, but I'm going to start, we're going to be working on those next week, and and we usually try to find something that has tight stuff. But that, yes, definitely taking wide spreads, you already start with the disadvantage, because you have to have more profit in order to get green. Other question? For those, I didn't see this from Jeff. For those of us with limit trading hours due to other responsibilities, would it preferable to focus on earlier in the trade day? Avoid the first 20-30 minutes, and the best time to trade is the first 3 hours. Power hour is not reliable, so the first 3 hours of the market are the best for you who have other responsibilities. So you have to determine, okay, I have to work, I have this, okay, I'm gonna only trade 3 hours, the first 3 hours of the market. Always. Sorry, Jeff, I missed your question, but now I saw it here, so hopefully you're still there. So I don't see, yes, you're still there. Okay, anything else? I think that it's, I mean, I thought that it will take on more today, guys, but I think that with these basic, very basic things, we can start doing this week, and we can have a second workshop next weekend to go more deep in technicals and more specifics about how to read the charts. But I think that right now, with all these foundations that I gave you today, is more than enough for you to put it into action. And the most difficult part is going to be fighting against yourselves, right? Because you have to be very disciplined. You're going to have the temptation of breaking all the rules that we're saying, playing more trades at the same time. Do not quit the day after you reach your goal. So that is going to be the challenge for this week for you. Sorry, challenge is a forbidden word now. That is going to be the whatever you want to call it. So is that clear, guys? It makes sense? Did something click tonight? And when I mean, guys, when we take lottos, for example, is that my lottos, the maximum amount of the lotto is your risk amount. So if you have $2,000 account, your maximum, your lotto position should be $65. And you don't put stop on that. Not $350 in lottos. No, it's only $65. So if you lose it, it's like losing one trade, right? 65. It's like losing a $350 that you put, that you had a stop in 65 to make 3 times that. When I say I'm in heavy, is that I go full size since the beginning. I go my $350. If I have $2,000, I go $350 since the beginning. I don't go do a starter. I don't do a start with half. I go full. Or I go heavier than that, but my stop is going to be tighter because it's going to continue being my $65. So if I go very heavy, I mean, I have $2,000 account, my maximum trade is $350 to risk 65 to make 3 times that. But I'm going to go 700. My stop is going to be at $65. So when I go very heavy, is because I already know that this thing is not going to come down. I mean, it's going to go up, 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 and I'm not putting, since I'm going to have very tight stop because I'm putting more amount with the same amount in a stop, my stops are tighter. So it's like Cube said right now, I mean, if I can go with 1,000 and 20, no, I mean, you can go with 1,000 instead of 350, but $65, that is not going to change as your stop. No, I don't break the rules. I go heavier. I mean, or either I go heavy in the terms that I go full position since the beginning, or even 2 or 3 times that, but my risk is still the same, $65, right? Whatever it is. Is that clear? And sometimes I when I let it die, is because the amount of share, the contracts that I have are, the total amount of that are the equivalent of my maximum risk per trade. So I can leave it to auto zero, like a lotto. And remember that I have different accounts. I have my trading. daily trading, the one that I trade with you every day, that is small, is 10K. And I have 2 or 3 more that are heavier, that I have different sizes for that. So that's a different story, but my risk is always the same in proportion, right? So that's it, guys. I think that if there's no more questions, I mean, I think it's a good foundation today, it's nothing new of what we have said, but it's a little bit more explained. Probably the part of the 3-minute haven't been discussed before, but I just added that because I think it's very helpful. I don't use it, the 3-minute, like I already manage myself with the 10-minute, but for you, could be a very good tool for that micro moment to say when I pull the trigger for in and out, right? So if nothing else is needed, guys, see you tomorrow. See you tomorrow, and let's do this tomorrow, and let's see how it goes. I think that a lot of things are going to change from your trading if you start. And please journal this. I want you everybody to